This video is on financial derivatives. Now, this is a really cool subject area. So what I'm going to do is I'm going to lay out the basics of what you need to know to understand financial derivatives. So let's just jump right into it. A financial derivative is a contract that derives its value from an underlying asset. So that's why they call it a derivative, because it's deriving its value from some other asset. Now, this is an important concept to understand, because when you're trading financial derivatives, what you're doing is you're buying and selling pieces of paper. You're not actually buying and selling the assets, you're buying and selling pieces of paper that derive their value from an asset. And I'll give you a really simple example of this. Let's say you wanted to participate in the oil market, but you didn't want to actually go out and buy and sell barrels of oil. For all kinds of practical reasons, that might not make sense for you. But what you can do is you can buy and sell financial derivatives. And these are pieces of paper that derive their value from these barrels of oil. So I hope you can understand the distinction there, that a financial derivative is you're buying and selling pieces of paper. And that's not to say that they're not valuable. They're very much valuable, but you're not buying and selling the asset, and that's an important concept to understand. So, to put this in a larger context, if you look at the finance world as a whole, there's three main types of financial instruments. You have stocks, you have bonds, and you have financial derivatives. So, we've already talked about stocks and bonds, and the difference between stocks and bonds and financial derivatives is this concept that financial derivatives, you're buying and selling pieces of paper. Now, you might stop me at this point and say, well, isn't that what a stock is? Or isn't that what a bond is? And that's not necessarily the case. Because let's look at a stock, for example. When you're buying a stock, what you're doing is you're actually buying a piece of that company. You actually own that asset. Whereas if you were to buy a financial derivatives, like for example an option is a financial derivative. And you can buy an option that's based on a stock price. So if you buy an option, you're buying this piece of paper, but you're not actually owning any of this company. So that's just one example. And bonds are the same thing. When you buy a bond, you're actually buying a piece of somebody's credit worthiness. And financial derivatives are this concept of you're not actually buying the asset, you're buying a piece of paper. So, to fully understand financial derivative markets, we need to know a little bit of history and how all of this came about, how this all started. And it started with farming. Now, farming is a really interesting business model. And how it works is, of course, you plant your crops at the beginning of the season, and you harvest your crops at the end of the season. And so what these farming businesses are doing is they make all their investment up front, and then they make their profit at the end of the season. When they harvest their crops, they take their crops to market and they sell them. Well, in this situation, a lot can happen between when they plant the crops and when they harvest the crops. And one of the biggest concerns here is commodity prices. So, if you've ever watched commodity markets, or the markets for the prices for these crops, you know that commodity prices fluctuate up and down depending on supply and demand. So, if you're a farmer and you're sitting here at the beginning of the season trying to make business decisions For instance, whether it makes more sense for you to plant corn or to plant soybeans. You're looking at the end of the season and trying to guesstimate what commodity prices will be, because that will determine what profit you make, and that influences your business decision. Well, that's a really hard thing to determine. Now, finance people are very smart, and they came up with a solution to this problem. And they said, let's create a complex financial derivative. And so what they did was they created a contract. They created a piece of paper. And on this paper, this contract guarantees what the price will be to sell these crops at the end of the season. And they give this piece of paper to the farmer, and this costs a little bit of money for the farmer to set up, but it's worth it to guarantee what those prices are. So here's the cool part, is once this piece of paper is set up, it becomes a financial market, because you can actually buy and sell this piece of paper between parties. Because whoever holds the piece of paper is the person who's going to be able to purchase those crops at that set price. And the piece of paper itself becomes valuable. Because what happens is, depending on what's happening in the commodities market, as the price fluctuates up and down, that's going to impact the value of this piece of paper. Because if the commodities market, if the prices increase above the price set in this piece of paper, then whoever holds the piece of paper and purchases the crops at the end of the season can make an instantaneous profit. Because what they can do is they can buy the crops at the price set in the piece of paper and then go out and sell the crops on the commodities market at a higher price. So, I hope you can start to see how valuable these financial derivatives can be. Not only for the farmer, but in creating this financial market. Now, financial derivatives get a lot of bad press. You'll read these articles in the newspaper about how somebody lost a lot of money by trading financial derivatives. And so there's a lot of negative publicity about financial derivatives, and I wanted to address this. Because I think a lot of it comes because people don't really understand financial derivatives and how valuable they can be. Financial derivative markets are very large. They're very huge markets. And just like any other financial instrument, it's possible to lose money trading financial derivatives. But they do actually create a lot of value for society. So, what I'm going to do in the next video is we're going to dive a little bit deeper into this concept of financial derivatives. And I'm actually going to walk through a lot of different types of financial derivatives and explain how they create value.